guys, welcome back to my channel. If you're new here, my name is Property Sue. I do videos on real estate and real estate related matters. Today is Thursday and it's time for Thursday thrillers, but today I won't be giving you guys a story. I'm here to finish on Tuesday's video. Actually today I didn't think I'd do a video, but I've gotten back on time and I think that is why I'm doing it now. It's actually like 2:30 and I'm hoping this video goes up before midnight, hopefully. On Tuesday we discussed about the process of buying a house in Kenya, and I discussed on the part of cash payment. If you have not watched that video, you can go over there and watch it. I said today I'd cover the part on mortgages. In Kenya today there are two different people who can give you mortgage loans. The traditional method used to be through banks, but right now some developers have introduced the rent to own model. If you have not watched a video on that, I'm going to put it at the end of this video for you to understand the rent to own model in Kenya. And that is why now today we have traditional financiers, which are the banks. That is why today we have traditional lenders, that is banks and some institutions. On the other hand, as I mentioned earlier, developers have introduced a system where they have their own financiers. That is, they give you a loan which you will be paying back in form of monthly installments. So in that way you'll just be paying monthly installments to own the house at the end. Like, both models are similar, it's just the financial on the rent to own models usually have lower interest rates. And now let's get into the types of mortgages. There are two types of mortgages. The first one is fixed rate mortgage and the second one is adjustable rate mortgage. Just like its name, the interest, the loan remains fixed throughout the loan period. And these ones are a bit more difficult and a bit more expensive to acquire. And then we have the adjustable rate mortgage, which is the most common arrangement with most financiers. In this one, the interest rates change according to the market, and repayment is also on a reducing balance. Now let's get into the process of getting a mortgage. Number one is appraisal and approval. This is where you're going to approach the financier of your choice, and they're going to let you know whether you qualify for a mortgage and how much you qualify for. This is normally based on certain parameters like your income, your debt to income ratio, your age, your credit score, among other things, depending on the lender in question. After this first stage is when you will know whether your mortgage application has been accepted or rejected. The second part of the process is searching for a property of your choice, and this is where you're going to come onto platforms like Property Sue and other many platforms like property websites and look for the property that is most appealing to you. Of course, if you want to, this is the stage where you're going to involve real estate agents. Number 3 is processing of the mortgage. That is, if your mortgage was approved, your lender is going to ask for certain documents, and these documents vary according to the institution in question for them to process your mortgage. The fourth step is where the financier will now give you an offer with the terms and conditions for the loan which they are going to give you, and at this point you agree to the terms. If you're okay with them, you're going to proceed, or if you're not okay with them, also you could stop at this stage. Number 5 is the acquisition of the property by the lender. So the lender is going to go and acquire the property on your behalf, of course after asking for relevant documents from the owner of the property, and then they're going to charge the title of the property against the amount which they are going to lend to you. Number 6 is the payment. If your financier didn't pay for the property, because sometimes they decide to give you the money and you pay the owner of the property directly. If they didn't pay the owner, you're going to pay the owner of the property, but sometimes they go ahead and do that for you prior. This process normally takes 90 to 180 days. Nowadays, we even have diaspora mortgage arrangements with some financial institutions whereby they give people in the diaspora a chance to invest in their own country. But these mortgages have certain conditions, among which most of the time the repayment period is normally up to 15 years. The loan most of the times is limited to 100 million, and the lender offers 70 to 90% of the financing. That was it for today. Thank you for watching this video until the end, and I look forward to seeing you on Sunday for a house walkthrough. I have a very good property. You're going to be very pleased by it. It might be a property you see every day on your way to work, or you have heard of but maybe you've never gone to visit it. Also on Monday, I went to Syokimau, just like somebody had suggested for me to go to areas like Syokimau and Athi River, so I began in Syokimau and I found Syokimau gems. After this weekend, the following weekends are going to be properties dubbed Syokimau gems, and I'm so excited to have you guys see what Syokimau has for you. And I was lost for words, and actually there are very good properties on that side, and I'll be proceeding even down further to areas like Kitengela and the rest, and you'll be seeing those properties in coming weeks. If you have any video suggestions you'd like me to do, kindly comment down below. Also next week, Tuesday and Thursday, I'm doing a video suggested by one of you. And thank you guys for watching, and thank you for your comments. They are really appreciated. I always make sure I read and respond, so comment down below with anything you have to say. Anything, guys, anything. And until next time, it has been your girl Property Sue, and bye.
Feel the daylight on our skin. We are young, we feel everything.